It is Veterans Day. Make sure you, if you get the opportunity to thank a veteran for their service, make sure you do that. Again, all gave some gave all. So again, Veterans Day is an important day. Mom, Dad, thank you for your service. All the veterans that watch one rental at a time, thank you very much for your support. I appreciate it. I appreciate you. I got a couple of interesting veterans facts, many of which I did not know. I thought we would start the day with a couple of facts about veterans. In 2023, there were 15.8 million veterans. That is actually more than I would have expected. It's almost 10% of the population, I believe. Actually, about 5% of the population. I think we're about 320 million from memory. Something that was interesting when you start slicing and dicing the data, 27, let's call it 28% of veterans are 75 or older. I'll say that again. 28% of veterans are 75 or older. That did shock me a little bit. When you look at the other side, according to Google's search, 8.3, let's call it 8% of veterans are 35 and younger. So again, when you look at the age of the military veterans, we're clearly skewing to a higher age. And the last thing I'll say about Veterans Day, which again is an important day, it was actually originally called Armistice Day. Man, can't say that early in the morning. I did not know that. It was changed to Veterans Day in 1954. So again, shout out to all the veterans there. A couple of things I want to talk about. Because it is Veterans Day, it appears the stock market is open, which I don't know. I'm shocked a little bit by that. But the bond market is closed, so we won't get an adjustment on the 10-year note. Mortgage rates really aren't. I don't know if mortgage rates will see much of a move this morning. But again, the bond market closed. Stock market is open. I do want to highlight that my 8 a.m. interview this morning was canceled. So I'm going to go live at 8 a.m. I'm going to start off the discussion at 8 a.m. by highlighting many of the speakers. I want to highlight the speakers that will be going to the Vegas event, give you some more color on the Vegas event, why you need to be there. But yeah, we're going to go live at 8 a.m., talk about the speakers, talk about the format of our ORAT celebration. But as always, I will hopefully see you there, and we'll answer any and all questions. I've got an hour that I allocate to creating content, an hour to helping people. So the interview got canceled. So I will just go live and see what you guys have on your mind. I want to highlight again, you guys are starting to get it. You're starting to get it. I've been talking about a buyer's market for a while. I had a great conversation with Jason Pritchard. Again, Jason Pritchard, if you don't know, I place on the Mount Rushmore of real estate investors. He was gracious enough to come back on the channel yesterday. And we talked about how a buyer's market is impacting his business. Jason has 11 flips going on right now. Thankfully, 9 of them are in contract, but he has had to change his business. The buyer's market is real. And when you are running a business, spending $90,000 a month on marketing and overhead, you've got to be pretty flexible. You've got to change quickly and be decisive. So if you want to see a very meaty conversation that gets into the details, go ahead and check out that interview from Jason Pritchard yesterday. But I want to shout out Annie Alexander 9616. Again, this was a comment on one of the videos from yesterday, actually Jason's video yesterday, but it highlights what I hope you see. If you are like Annie and you are doing the work, I hope you see things like this. So here it goes. Does anyone feel like it just might be the beginning of a buyer's market? Well, yes, Annie, I do believe we are at the beginning of a buyer's market. I made an offer on a home 1 month ago. I got a message back yesterday. Interesting how that happens. They are finally willing to accept, but now I'm thinking I will go even less. So a couple of things I want to say in that. First and foremost, I replied to Annie's note with, hey, Annie, go get the credits, go get the repairs, go take this great deal and make it even better. But something I hope for all of you is you don't wait for an agent to call you back. Now, in this case, clearly the agent or the selling agent is doing a great job. They were tracking interested buyers, but don't leave that to chance. I hope you at a minimum, follow up with your offers every 2 weeks. Folks, as you will see in the interview with Jason Pritchard, the money is in the follow-up. He is closing deals on new purchases that he initiated 18 months ago. You just never know when a buyer is going to finally go, okay, I give up. I'm out. Take this number. I want to move on. Folks, you make your money when you buy. You get great deals when you buy. Buyer's markets is where doing the work pays off. This is not 2022 where speed and cash matter. Buyers make deals. That's you. That's you. You right there. You, the person watching this video right now, you make the market. Just because there's lots of inventory doesn't mean squat. It's the buyers that make the deal. So please do the work, get a buy box, track days on market, write disrespectful offers, follow up. And again, eventually something will break your direction. So we're getting a pretty clear picture on the housing market. Again, these are things that I told you were coming. We nailed it again. Housing inventory is down week on week. It's down almost 2%. That's quite a fall, 2%. So again, let's walk this through together. There was only three ways inventory could fall. One, stuff can go pending. Right? Something could go in contract. It will go from active to pending. Two, we will get less new listings, right? You get the demand pulling it out. You get less new listing. Inventory falls. Or three, something I told you was coming. It's very rarely discussed or tracked. We are getting cancellations, expireds, withdrawns. Sellers are simply saying, hey, I'll stay put. I'll try later. But all of these details mean the people that are left have to sell. Take your shot. Do the work. It is all out there for you. NAR chief economist Lawrence Yun is out in the news again, saying that the worst of the housing inventory is coming to an end. Mortgage rates are stable and job additions strong. Well, Lawrence, I think you're a little early, buddy. I think 2025 is going to be a year that surprises everyone. Thankfully, I've been highlighting this for the last 8 to 10 weeks. I was seeing a lot of people make plans for 5.5% mortgage rates, which I did not see coming. I don't know how they got those numbers. It's not coming. In fact, again, I think we could be, 7% for most, if not all, of 2025. So again, Lawrence, I know. You work for National Association of Realtors. You're supposed to be glass half full. I get it. But hey, you got another tough year, buddy. We could do 3.7, 3.8 million sales. We could be at like lifetime lows when you adjust for population. Right? It's going to be slow, buddy. Again, back to housing inventory. I talked about it being down 2%. I'd be remiss if not highlighting it's actually up and up big year on year. It's up 27.3% year on year. So again, the market is slowly building. Not sure if you've tracked Trueflation. Again, Trueflation seemingly, 2 months ago, 3 months ago, was below 2%. It is ripping higher. I don't know if you've gone to it, but it is at 2.73. Yes, CPI, true inflation is higher, 2.7. That's important because, again, on Wednesday, we will get the latest and greatest CPI reading. For the longest time, Trueflation was below the official print. Now it's actually above. Last month, we were expected to be 2.4. I actually think it will be higher at 2.5. So, again, we will see where that goes. Former Treasury Secretary Mnuchin, think that's how you pronounce his name, is out talking about his former boss's likely priorities. Again, saying that President-elect Trump will be focused on tax cuts, Iran sanctions, tariffs, and border security. Looking at that list, I don't think it surprises anyone that that would be front and center. To that end, one of the things that I take from that conversation, back to Jerome Powell, Fed President Jerome Powell. Jerome Powell, if you don't know, I believe his term as Fed president ends in 2026, roughly, I think 16, 18 months from now, something like that. Frankly, I think Powell completes his term. I think there is lots of priorities, lots of things to do in the country. I don't think you want to mess with the Fed as we get there, again, because there are other priorities going on. That said, there is no questions. President-elect Trump will be pushing his priorities as he says what he thinks should happen, which is fine. All of us talk about that. So again, it will be interesting. Neo Kashkari, again, folks, get ready for Fed speak. Fed speak, Fed speak, Fed speak. They're all going to be asked about the election. They're all going to be asked about impact. They're all going to be asked around rate cuts. And again, while Powell was successful in saying nothing, I expect his minions to speak loudly. So we are going to have to pay attention. Neo Kashkari is out saying tariffs could hurt in the long term. Tariffs could hurt long-term inflation if global trade partners strike back. This is, of course, a la trade war. Following that, he says one-time tariffs shouldn't have any effect long run on inflation. This is really what I've been highlighting. I do believe we are about to see the scalpel of tariffs used and used appropriately, as opposed to blanket statements. The threat of blanket statements are simply intended to create fair trade, not blow up the system. Again, we shall see how China and others interact. But again, I think the threat of the sledgehammer is going to be enough to bring trading partners together and produce fair, or at least fairer trade. Saw Singapore Airlines earnings, and they were down almost 50%. And having traveled on Singapore Airlines many, many times, look at them as a semi, luxury travel airline. I'm wondering if Singapore Airlines is like Wynn. Remember Wynn we talked about last week, where the highlighted that the VIPs, aka the rich, were pulling back. I wonder if this is a trend. Right now we have a second contributor to this. I wonder if we are seeing the top 20% pull back. For the longest time, we've had a K-shaped economy, a bifurcated economy, the have and have-nots. I'm wondering if the haves are pulling back in meaningful ways, or was this just the last month, the election stuff? Again, a single data point doesn't make a trend, so we're going to have to pay attention to next quarter's earnings. Saw an interesting report about New York, specifically Manhattan. Guys, I don't know if you know this, but there was a ban on Airbnbs implemented just about a year ago in New York. They implemented this ban on Airbnb because they were saying that short-term rentals were causing rents to go higher and hotel rates to go higher. Again, they thought if they banned Airbnb, there would be a great unlock of inventory and you would see prices fall. So after a year of Airbnb being banned in New York, rent prices are actually up 3.5%, and the hotel prices are up 7%. So unfortunately, it didn't happen. Rent did not go down. Want to say shout out two new members of our school community, Harriet and Nicholas. Thank you very much for joining the family. We are growing very quickly, folks. You need to join the group. You need to be around now 325 other amazing individuals that are doing the work, sharing the wins, networking. We had an accountability group yesterday. Yes, Sunday's accountability group was nuts. We had 15 people join. Topics were risk, taking the plunge on your first deal, mindset, Vegas event, college towns, working with real estate agents, buyer's agreements, finding good agents, single family versus small multi, construction, working with GCs, et cetera, et cetera, et cetera. You want to join these groups? Jared, thank you for running the Sunday session. That is, it is fun to watch these accountability groups grow. And as our community grows, I fully expect to one day have 7-day-a-week accountability groups led by other individuals. So again, if you are in the community, you want to give back, we have a couple of days a week where we could schedule some more accountability groups. Not sure if you saw this, but Bitcoin's ripping once again. I think the last time I checked, Bitcoin is over 82,000. I did hear somebody over the weekend. I think it was Anthony. I'm going to mispronounce his last name. I think he goes by Pomp, Anthony Pomp. Talk about the fact that the U.S., and again, I don't know if this is true. I just thought it was interesting. The U.S. federal government may add Bitcoin as part of the reserve. And his opinion, again, no vote, no opinion of mine. His opinion was if the U.S. does that, it could set off a global, government kind of, hey, we want to go get ours. Much like gold, right? You see folks like China and Russia and others have gold as, buying lots of gold. So again, no idea if that's going to happen. No idea if it's even possible. No idea if the charters from governments allow that. But I thought it was at least an interesting thing to share. And yes, I am very happy I moved 1% of my net worth. I think that was 2018 into crypto. Again, 1% of my net worth is in that. It's insurance policy. To me, my investment in crypto is not even an investment. It's simply an insurance policy. And right now, that insurance policy is paying off nicely. It's up 400 some %. So, hey, I guess I'll take it. Jared, last thing we'll say before we get ready to do our 8 a.m. live stream is Jeremy Siegel. Jeremy Siegel, yeah, that guy is out saying that Trump is the most pro-stock market president in history. I have no idea if that's true. I frankly don't study history all that much other than economics. But again, it is interesting to see what people are saying now. It's interesting to see what's happening in the market, the results. I don't know. It is going to be interesting. Again, folks, hope you have an amazing day. Again, thank a veteran if you know any. It's just going to be a good day. You're amazing. Keep doing the work. Keep having a positive attitude. Keep writing those offers. Don't forget to follow up. We are in a buyer's market. Enjoy. Take care. Later. Bye.